Hey everyone, my name is Daniel and welcome back to the Finance Channel. I hope all of you are having a great day out there. As always, here today, I want to talk to you all about Robinhood, the popular stock and crypto trading platform that just went public here today on the NASDAQ. I'm going to go through the business model and dive deep into the numbers, analyze the potential to tell you guys whether or not it's worth it to invest in Robinhood stock. So if you end up enjoying this video and potentially finding some value in it, please consider subscribing. And with that out of the way, let's get into the video. So looking at Robinhood again, it's not too difficult to understand their business model, which we'll go through again. As we go through the numbers, it'll be easier to understand the business. But at the end of the day, they are a cryptocurrency / stock brokerage that allow you to buy into digital assets, stocks, options, or other things along those lines. Now, if you are within the United States, or potentially some of the markets that Robinhood operates in, I think they may be within Europe, but either way, regardless. If you are within a market that Robinhood operates in, I recommend that you go to the App Store, download Robinhood, play around with it to get an idea of their platform. Needless to say, however, I think a majority of the people that watch this channel and are involved in the stock cryptocurrency space have an understanding of what Robinhood is. If you're located internationally, feel free to go onto YouTube. I'm pretty sure there are a lot of tutorials out there. But that's kind of the business. They make money off of transactions and off of their users, which obviously deposit money onto their platform. Now, looking at their actual valuation here of their stock, they went public at around $38 per share. The stock spiked up a little bit and then swoosh, it went down to around like $32. I think it was at one point, kind of averaged in at around $34.50. I did not average in. The stock finished the day at around $34, $35 in after hours trading, as I kind of saw it when I was making the spreadsheet. It was trading at around $34.50, which gives it a market cap of just around $29 to $30 billion. I do have that variable there because I still don't have a full understanding of what the fully diluted share count is at Robinhood, how many warrants outstanding there have, potential options that employees have. I'm saying around $30 billion, and this compares to SoFi sitting at around $13 billion, Coinbase at around $62 billion, right in the middle of those two. We'll go through a comparison with Coinbase in a moment here, but now that we understand the business, the valuation, they just went public, they're out there, you can buy their stock, great. Let's take a look at a lot of the numbers. And this was actually taken, at least a majority of this information, was taken from Robinhood's, I believe it was their S1 filing that they filed back on July 1st that goes in depth into their business model, how they make money, their profits, risks, etc. And I'll leave that linked rather in the description down below if you want to check that out. It is hundreds of pages long, so do keep that in mind, but it goes in depth. And I did take some of the most important parts from that and plug them into a bit of a spreadsheet here to give us an understanding of Robinhood as a business. We can see over 80% of Robinhood's revenue comes from transaction-based sources, transaction-based revenues. Whenever someone buys or sells a stock, an option, or a cryptocurrency, $420 million. This is in Q1 of 2021. So this is January, February, and March. You have net interest revenues totaling around 12%. This is things like margin, other things similar to that category, loaning out, interest, right? And then you have other revenues totaling around 40 million, just a little under right around 7.5%. This is other revenues. And the majority of this comes from Robinhood Gold, which is their kind of like their premium subscription plan that allows you to get potential discounts on things or premium features, things like that. So we have over $500 million in revenue in Robinhood's latest quarter. We can kind of split this up as a majority of their revenue comes from transaction-based sources, and you can kind of split it up even more to see that options generated around 38% of their total revenue, right around $200 million, equities around $133 million, and cryptocurrencies being kind of the smaller one, sitting at just under 90 million or 17% of their total revenue. So you see a vast majority of their revenue actually comes from option trading, which, at the end of the day, Robinhood makes it very easy to really participate in the options market. They have a great education strategy just on the app, making it very simple to understand and buy or sell puts, covered calls, the entire options market. So not surprising to see this here. And, it also being, at least from my understanding, one of the most profitable or the most profitable segment out of the three here from the perspective of taking fees. It totally makes sense that this is the biggest source source of revenue for them. But either way, right around $500 million in revenue this quarter. Now that we understand the revenue, let's take a look at expenses. What are expenses on this revenue? And this is something that's parallel with every single brokerage or exchange out there. They are ridiculously profitable. And we can see cost of revenue or brokerage and then transaction expenses, which essentially is, cost of revenue for something like Tesla. It may be the parts or potential, salaries to create cars, things along those lines. For Robinhood, it's actually processing the different transactions when it comes to stocks, options, cryptocurrencies. And you can see that it only totals around 8% of revenue. Now, the question then comes, why are they not profitable? Which we'll take a look at in a moment here. Well, the reasoning behind that is pretty simple. They're investing in their future. You can see that they're spending over $100 million, at least in this most recent quarter, on technology and development of their platform, R&D, essentially, research and development, right around 22%. Then you have operations, right around 12.7%, marketing, over $100 million, again, growing the business, investing in the future, and general and administrative expenses sitting at around $140 million. Again, you do have to understand that as a brokerage, they have a lot of flexibility when it comes to how profitable they want to be. You have a business like Coinbase, similar space, just within cryptocurrencies. They're choosing to be ridiculously profitable by spending less on things like marketing or, in this case, maybe technology and development. Robinhood, obviously, smaller in terms of revenue to Coinbase. That may be one of the reasons as to why they aren't as profitable. But either way, you got roughly a 10 to 12, 9% net income margin factoring in this tax rate here that they did pay. Again, they did show like a $1.8 billion loss on the bottom line. You got to keep in mind that is just a change in fair value of warrants that they issued potentially prior to maybe back in 2020. The company's value increased in the private markets, and those warrants increased in value, showing a net income loss on Robinhood's balance sheet, or rather a net income statement, when in reality it is a non-cash expense. This is something that I've been talking about for a while, and another company that I invest in, Voyager Digital, it severely impacts their bottom line as well, as if the stock fluctuates to the upside, they're going to see a major net income loss. In reality, again, it doesn't affect the business whatsoever. And if the stock drops substantially, you're going to see a net income gain. So you got to kind of cancel this out, which is what I have done here. And again, you get roughly 9% net income on the bottom line here, which is, that's great to see. 9% net income, nowhere near their potential. In my opinion, potential is well over 30% for a company like Robinhood, especially if they mature in the back half of the next 5 years here. But either way, if you got a company with positive net income, that's a good thing because you're depositing money onto their balance sheet on a quarterly basis, not taking away, which is reducing the risk of potential dilution when it comes to Robinhood stock. Now, when you kind of look at this from a potential valuation perspective, and this is where things get a little bit debatable, and I will change this in a moment here, so no doubt, if you kind of annualize what Robinhood experienced back in Q1, you can see that they're on roughly a over $2 billion revenue run rate, again, based off of Q1 numbers. How likely is this? I don't know. And again, we'll take a look at this in a moment here when we compare it to Coinbase, but using this number, using this optimistic scenario, keep in mind we did see a bit of a decrease in trading volume across a variety of categories like stocks, options, and especially cryptocurrencies throughout, April, May, June, July. We could expect a pretty significant drop in Q2 revenue, potentially Q3, recovering a little bit in Q4. But either way, now assuming this optimistic scenario, we get a price to sales ratio of right around 14. Now keep in mind, this is not accounting for the potential of dilution and further potential warrants expiring, things along those lines. And it's also not factoring in the potential of a decline in Q2 and Q3 revenue, which will more likely than not happen, especially given the substantial jump we saw in Q1 and the rather kind of decrease in sentiment we've seen here over the past couple of months. So 14 on the optimistic side. Let's take a look at a comparison here just in a moment. Robinhood experienced substantial growth in Q1 of 2021, and you can see that they did over half the revenue they did in 2020 in just the first quarter of 2021. So it does question the sustainability, but one interesting company that experienced something very similar to this and is obviously similar in scale is Coinbase. Coinbase experienced a surge in revenue in Q1, more revenue in Q1 than they did in all of 2020 combined. Again, factoring in Q1, Q2, Q3, Q4. So when it comes to potential sustainability, I think it is very similar to something like Coinbase, which again, Coinbase may be a little bit more extreme, but let's take a look at a comparison with Coinbase. I'm using them because they're just similar in size here, but looking at Coinbase, again, $1.8 billion in revenue, we can expect a significant drop into Q2, Q3, Q4. Now, I may be a little bit, I want to say, conservative or pessimistic here in my numbers, but when it comes to the brokerage industry, it's very difficult to value these companies because you're trying to predict volume within the industry. And how do I know? I'm not a wizard. I don't know what volume is going to be like in cryptocurrencies over the next few months, but I can potentially predict some form of valuation using a more conservative scenario. At that point, there's only upside left, right? So in this situation, I've got $5.5 billion in revenue priced into Coinbase here, and at their current stock price and valuation, you get a price to sales ratio of right around 11. Now, I do think this is, again, on the conservative side. So, worst case scenario, maybe they're trading a little bit lower, maybe in the 10 price to sales ratio range, maybe the 9 price to sales ratio range. Keep in mind, they are larger than Robinhood, but if you take a look at Robinhood rather, and again, assume this sort of decline into Q2, Q3, Q4, which isn't as substantial because the stock market is not seen as substantial of a decline in trading as the crypto market has had. And again, Coinbase significantly more exposed to cryptocurrencies than Robinhood is. So assuming a bit of a revenue decline here over the next couple of quarters and the current valuation of the company, you get a price to sales ratio of 15.4. Now keep in mind, this is different. With Coinbase, I'm using more of a conservative valuation, and with Robinhood, I'm using more of an optimistic scenario. So more likely than not, this number could be anywhere from 16 to 20, I want to say. So at the end of the day, Robinhood's valuation is significantly higher than Coinbase's. Now, the two companies have very similar profitability potential. Coinbase is already exploring that, Robinhood not so much. And, the thing you got to ask yourself is it worth it to pay significantly more for something like Robinhood than Coinbase? And, at the end of the day, it all comes down to growth. What is the growth potential at Robinhood compared to Coinbase? And if I have to pay a 15 to 20, 21 price to sales ratio for a company like Robinhood, I should expect a heck ton of growth over the next potentially couple of years. Even if you assume potentially like a third of their revenue going down to profit, you're paying right around a 45 to 60 price to earnings ratio for this company. If you're paying that much, the company you're investing in should be growing significantly. And when I look at Robinhood, although I do see growth potential, it does have to come into question. If they're already at 18 million funded accounts or over 20 million funded accounts based off of where their business is here today, similar to something like Fidelity, is it likely that they're going to continue growing 20-30% in terms of revenue over the next 3 to 5 years? And if you believe the answer to that question is potentially yes, Robinhood may be a good/okay investment. But if they don't hit those numbers, that's where things get a little bit more complicated. And that's the thing you got to understand when investing in a thing like Robinhood. The valuation is similar to that of a substantial growth company. They do have a lot of profitability potential, but the question of how much more will their revenue grow has to be answered before I potentially put any money into Robinhood. So when I look at this company, I am personally not buying any shares in Robinhood, especially at these valuations. I'm going to wait a little. I think the company, as long as they continue executing, it's going to be good. They're democratizing finance, as they say, potentially expanding into new product lineups, new verticals will allow them to expand on, revenues per user at this point. But I personally think there is a lot of potential for volatility within the stock, given the, again, drop we've seen in trading volume across the board that maybe hasn't been priced into the stock. We'll see in their Q2 report. And the potential for further, I want to say, controversy is around Robinhood. Obviously, over the past few months, while Robinhood has been in the private markets, there has been a lot of controversy around Robinhood, and they've gone through a lot of trouble. So what's that going to look like when they are in the public markets? Is the stock going to drop substantially? Is it going to hold up? That's a question we got to ask ourselves, and that may be a nice buying opportunity. But either way, I'm not buying at these prices. I do find more value in something like Voyager Digital, which is also involved in the brokerage space. And make sure to subscribe because I will be doing a part 2 comparing Robinhood to Voyager. But either way, I'm neutral on Robinhood. If you like the company, feel free to put some money in it. I'm not a financial advisor. I can't tell you to buy or sell a stock, but it's up to you. I'm going to say a little bit too rich for me. So anyways, let me know what you think in the comment section down below. I think Robinhood is an interesting company doing interesting things, but trading at a bit of a rich valuation. Thank you all so much for watching, and I'll see you in the next one. Bye-bye.